All right, good evening, everyone. This is Kevin Hurley with the Hurley Investments Financial Services Commentary for Tuesday night, the 8th of May, 2018. I've had some very interesting conversations and occurrences happen here in the market, and I'm going to start this off a couple different ways. If I was to ask you let's see, I'm going to do this a little bit different. If I was to ask you how the market's doing this year, what would you tell me? What would you tell me if I was to ask you, how's the market doing this year? Can't spell. So a couple of you said vacation. I see the market's volatile. The market is tougher than it was last year. Retraced some since 2017. Amy, not making as much money as I thought. Okay, these are all interesting comments, but it's not necessarily what I would be looking for. But no matter what, we eat and consume every single day. In all honesty, when someone asks me what is the market doing this year, it's very simple. Dow Jones Industrial Average down 1.45%. Because this is what I get judged by, right? I want to change this a little bit. All right. Come on. SPX is down next to nothing. XPX is down 0.06. And the NASDAQ is up 5.27. And all these are year-to-dates. So if someone was to ask me, here's what I have to tell them. That's where I'm at. I'm at plain and simple. That's my year. It's a number. It's a dollar figure. It's a percent. Now, which number would you judge yourself against? Which number are you going to judge yourself against? Lance, that's very interesting. Lance just made the comment, I would judge myself against the Dow Jones Industrial Average because it's down the worst. Because it's down the most, right? Because it's down the worst. I think that's what you meant to say there. So, Lance, it makes sense. I mean, you judge yourself where you look most favorable, right? The Dow's down 1.45%. As long as you're not down that much, you're in good shape. Okay, what else? There you go, David. Kevin, it's hard to pick a number to judge because if we go low, it's too easy. If we go high, we're not beating the market. And it's interesting because you didn't say I, you said we there, David. And it's tough. I'll be honest with you. I get a lot of crap about what my returns are. That's the first thing people ask me. What are your returns? Well, what are you going to judge me against? Well, it's all about the returns. Well, the returns can be really good, but if it's a risk of losing your whole portfolio, are you willing to take that risk for the possible return? I have yet to see a day trader be profitable 2 years in a row. I have offered thousands of dollars in live events for someone to say, hey, you know what? Show it to me. I've got 10 $100 bills. Show it to me. And I have yet to be shown that on any seminars or any of my money shows. It's just, well, I can't show it to you. Sure you can. Well, I'm not comfortable sharing that. Really, for $1,000, you can't open up a portfolio on, and they call it exposed, but on open internet with the security I have from the Securities Exchange Commission on my computer. Really? You can't have that available. And I sit there and I go, that doesn't work. That's a cop out. It's not giving yourself accountability for the way that you're trading, the style that you're trading. In fact, if anything, it's just giving you an excuse to necessarily maybe not succeed. So I'm curious because Hurley Investments as a whole, well, that's not fair to say either. With what I am doing for the people like you, I don't have it. It's about 2.5%. It is nice to have days like today where you look extremely good on a relatively flat day. But you have to hold yourself accountable. Now, let me ask you guys another question. Hurley Investments might be up 2.5%, upwards to 4.5% for a couple people. Does that matter right now? Does that matter right now if Hurley Investments is up 2.5%, or if you're up 5 or 10%? Does that matter right now? So Lance, you actually answered just the way I was looking for. You answered, yep. But then David right behind you goes, not necessarily. Abraham, not much depending on what you expect forward. And then Mary, I guess it depends. And you all are right with the one exception, the one caveat. You don't go ask an investor what the returns are the first quarter, the first 4 months. You ask for yearly returns. So we may be beating the market right now, but a yearly return is what matters most. And I think, Abraham, when you say what you expect forward, the reality is it's what is your yearly return going to be? That's what's going to make the difference. That's what's going to say, hey, you know what? We're moving forward. This is the way we want to go. I say that because I'm going to follow up with the Jeff Bezos article, and I have the whole article, but Jeff Bezos said, wrote an article, this is what you're going to regret at 80. And out of curiosity, what do you think it is? I'm going to go ahead and ask you guys, what do you regret when you're going to be 80 years old? When time might be running short for you on this earth, what do you think your regrets might be? And I will bring this all the way around to trading. What are your regrets going to be? Rich. If I had half his fortune, I would be twice as wise. Okay. The things I haven't done. Rich, that's a good one. Lance, you just said what might could have been. What might could have been. I'm going to put that Rich's comment, the things I haven't done, what might I could have been together, and I think you're extremely close. When you think about the things you'll regret when you're 80, they're almost always the things that you did not do. They're acts of omission. Very rarely do you regret something you did that failed and didn't work or whatever, says Bezos in an interview. So let's bring this back to trading. Are you guys trading, or for that matter, having me trade for a thing, something that you're expecting? How many times have you guys heard me say, I hope you trade to live? You trade so you can live the lifestyle you want to and take the time doing the things that you want to do in life versus living the trade, being stuck to your computer 16 out of the 16 hours you're up each day, taking kind of a harder path in life to maybe be more materialistic. I'll be honest with you, it's nice making some great returns and living on an 1.5-acre property in Alpine, Utah, and in a 7,000 square foot home. I love the fact that I have cows and space and a place to live where I can rent out my basement to my sister-in-law and be just fine. I love all that. It's kind of what I live for. I live to have the time to do the things that I want to. I trade and I do this business because, for all intents and purposes, any day off or any up day on the market can be a day off for me. It's kind of foolish to take all those days off. You should be doing your research. You should be finding the next best thing, keeping in contact with people, doing Tuesday night shows, emails coming out, rebalancing and looking at portfolios, opportunities. There's a lot to be done, especially when it comes to finding new business. But with that said, I've placed myself in a position where no one single day will make or break a portfolio. I have the opportunity for a day off to spend that time with my kids. My day starts at 6:30 in the morning, an hour before the market opens, and I'm basically done at 2. At 2, there's nothing else that can happen that will hurt the portfolios. I will pay attention to an earnings like Disney. I will try to outguess, since Disney down after hours, is Disney becoming dead money or not? And I will do some research tonight, read through the earnings call, and just read through it to understand what questions were asked and how the answers appear to fit into Disney's overall earnings in general, I guess is the best way to say it. The overall picture on Disney. I can tell you right now, Disney beat on the top and bottom line, came in at $1.84 per share versus $1.70 expected. Their revenues came in at $14.5 billion versus $14.11 billion. Their media was down 6% at $2.1 billion. They're still losing ESPN subscribers, or their media in general is down. They're trying to fix that or replace it with more, I don't want to say more up to speed, but with Fox's media, because Fox seems to be getting better ratings. So they're going to buy that for $52 billion in an all stock purchase. Comcast is coming out against Disney for a $60 billion all cash purchase of Fox Entertainment. And it's an interesting to see $867 million come from one movie, Black Panther, and that they're taking a write-off probably in that $200 to $210 million range on A Wrinkle in Time. And I wonder if A Wrinkle in Time was hurt by Reese Witherspoon's and Oprah Winfrey's, I don't want to say more liberal comments, but by their more liberal voicings out there, that some people maybe are trying to talk and say, we're not willing to go support some of the views of the actors. A Wrinkle in Time should have been a really good movie with an all-star cast. And in all honesty, it's the biggest Disney flop since, I can't remember, but they had one that was a pretty good flop of $200 million before as well. So where I'm going at with this comes down to, for those of you doing your own trading, make sure it's something that you love, but also make sure it's not your life. Find a way to achieve those things that you want to by not forgetting what matters most to you. And I still see too many traders nowadays think a short-term gain, a 3 or 4 month upswing in portfolios means that they've got it figured out. Because in real life, it doesn't work that way. In real life, trading, making money, investing in the stock market is a system that can be adjusted to work under any market condition. Let me say that one more time. Can be adjusted to work under any market condition. And that's extremely hard to find. More often than not, if you are consistently beating the S&P 500, you're doing better than 99.6% of all the people that are out there, and better than 96% of all the funds that are out there, in which case you might not need to be looking for anything else. You probably have what you need to be very successful. Any comments or questions on what I just mentioned here? No comments or questions? Good advice. Thank you, Lance. I appreciate the compliment. All right, in that place, let's talk what's happening this week and why. What is happening this week in our markets and why? I'm going to wait for a minute or two and have you guys answer some of this. What's happening this week in our markets and why? A whole lot. Okay. Well, I'm looking for more than that. Give me more than that, for crying out loud. I want to see more than that. We have Uber lost. Could be. Any other comments? All right. Well, if I can be so kind to say, pretty interesting, because if you were to ask me, I'd say U.S. backing out of the Iran deal. which I think is a pretty poor deal, which equals or should equal a spike in oil, uncertainty in U.S. policy making, and the possible start to, I don't want to say trade war because that's not the way to say it, sanctions that may be perceived as trade war, as a perceived as implicating a trade war. So just some thoughts there. But obviously our market was going to be pretty flat. I didn't know if we got out of the deal if it was a good or a bad. I mean, it was going to spike oil, but maybe Iran is not that big of an oil producer that it matters. As I look at it a little bit, I kind of thought to myself, it's nothing but a thing, right? It's nothing but a thing. We can work with it, but maybe it is something more than a thing. It's just fake fact or factoid. Iran knows it doesn't have much options if it wants to survive. The real concern of mine is China. So I would agree with you, Abraham, but it's what Iran could turn into. If we here in the U.S. are going to support Israel, and Iran has the opportunity to possibly create a nuclear weapon that would eliminate Israel out of the gates, I mean, what would happen if 4 or 5 nuclear bombs were, lobbed over to Israel? Israel's gone. Maybe a lot of the Middle East celebrates. What does the U.S. do if we just lost an ally in such a brutal fashion? Do we come guns blazing on in like we've done in the past? Will we be supported by our allies elsewhere? It's a really interesting conversation there. Rich just made a comment, U.S. job openings surge. In fact, something that's more interesting is how will the U.S. economy fare with rising wages and higher interest rates? Do we really need a tax reform 2.0 for the people? But we're kind of interesting, how well will our economy fare with rising wages and higher interest rates? Will they offset each other? Will people earn less, but there'll be more people that'll have jobs? I think we already went through that, but it's rather interesting because you know what? We don't know where we're going to be yet. The United States markets are trying to digest what's going to happen. We don't know. We're not in a position to be able to tell. And I think that's where you see some of the volatility in our market. We've had some really good earnings. So we've had some fabulous earnings. Yet those companies have not taken off. It hasn't been a win-win on the earnings front. It should have been, but it's not. In fact, if anything, it's kind of the opposite. It's kind of a thud, kind of a dead earnings, if you ask me. It's interesting. The uncertainty is, I want to call it palpable. I'm not saying that right. The uncertainty is palpable. You can feel it in the market. It's not just with our president. It's with our government. It's with future trade. There's all kinds of things that are bringing up this uncertainty and this worry. Kind of ridiculous, actually. But yes, it's a concern. I was going to tell you, I really like Jeffrey's red hat in the money bull call. But the spread kind of went out the door today. Even with a couple dollars down, I wasn't able to get it filled. The uncertainty in certain stocks when it relates to defense, when it relates to some of the issues we have going on, is it's hard to work with. It's very difficult to work with. So I'm not sure how it's going to turn out. Next technologies wave will be the one that pushed more economy. I don't know when, but Trump is willing to act according to reality, which is very positive for the USA and ultimately for the world. It's interesting because he's finding out all the bureaucracy that you have to go through to get things done. And it's become much harder than I think President Trump thought it would be. So it's kind of worse because I think it's kind of bad because we are our worst own enemy right now. If you were to ask me where our markets are going to go, they're going to go higher. If we took a look at the Dow and looked for some technical indicators to help us, well, we're kind of muddling along. Once again, our MACD's on top of each other. We're touching the line of the RSI. In fact, as you take a look, I'm going to put this, I still have to write that we're bearish here. As I draw some trend lines, look at the S&P. That trend line, we hit the top today and we bounced right back down. Look at that tight range. We're looking for a breakout. So here's my question to the group. Will the breakout be up or down? All of you type it in. We got 17 of us. Type in up or down. We've got 2 ups. We've got 3 ups. No pessimism here, huh? 4 ups, 5 ups, 6 ups, 7 ups. All right. 7 people said up. No one said down. For those 7 people that just said up, why? It's a sell and may go away. We haven't really had that 20% bear market move to make valuations attractive. We have the buy the dippers that are no longer coming out in force. In fact, if I was to ask you guys, why is the NASDAQ leading us? Not only why is the NASDAQ leading us, do you know the S&P weighted on these bigger tech companies? The biggest sector of the S&P, 26%, is now technology, I read the other day, and only 24% is financials. So now, because of weightings, we have a tech-heavy S&P 500. We're still bullish because we don't have a 5 and a 20 crossover. Still bearish, excuse me. Take a look at our comps. Here we go. Here's our bullish index right here. And right now it's the winner. The NASDAQ is the winner year to date. If you ask me where we're going to end in May, I'm still going to go back. I'm fearful. You know, we're up a little bit right now. I'm fearful we're going to go down and test those lows at 2,500. I think our breakout will be to the downside. When I look at earnings, not much stands out at me. We're pretty much through our earnings sector. Thursday, Duke and NVIDIA are kind of big, but not a whole much happening through earnings. This is our week for economic reports for inflation. We'll probably have some higher inflation, obviously, because energy and oils have been up in pricing. Treasury budget will be interesting on Thursday. Not much moving our markets here. Small business came in today at 104.5, expected to be 104.7. JOLTS again, 6.55 million job opportunities versus the expected 6.025 million job opportunities. Inflation's coming in China. We got CPI and PPI on Wednesday. Bank of England announcement in minutes will come up on Thursday. Asking me how I'm looking to trade. I am letting the winners run with bull pudding. Let's get this taken care of a little bit. Underline it and let's make it black. Letting the winners run with bull pudding. The protective put earnings. If you were to ask me what I'm looking to do, I will probably do some 3-month out in time covered calls to get myself out to the next earnings. Yet give me some type of summer protection. Again, disappointed in earnings. I will need to go and do some research tonight on Disney, but the Avengers were the first one to reach $1 billion. They actually have 9 of the top 10 opening movies are there. The $1 billion group is mostly them. ESPN's problem comes down to simple numbers, a little bit on why Disney was down after hours after being up to $103.50. Amazon could be the next black market swan. I would suggest you read this. One of the risks of having these ETFs with higher weighting stocks like Amazon, where it could really set a domino effect in these program trading. And then some of Warren Buffett's 3 investing tips. I just spent a lot of time reading Warren Buffett only because he really inspires me. Obviously, the whole article on what are you going to do when you're 80, I have that here from Jeff Bezos. With that said, any questions you guys have that I can answer for you tonight? Any questions you guys have that I can try to answer for you tonight? And I hopefully I'm not trying to bring you down. I just want you to think a little bit about what you're doing and why. It's not always about winning every trade. It's not always about bragging that you're up more than the market is. It's how are you going to end this year, and are you doing what you're trying to get done to live the life that you want to live? Pretty neat. Baidu was a big winner for my account today, and people ask me all the time, well, Kevin, why are you in China? You know, why would you do what Kramer says don't? Well, Baidu's been my best earnings, and it's pretty interesting because China sometimes offsets the summer doldrums that we have here in the U.S. China seems to move more during those summer months than the U.S. does. By bull putting, do you mean buy to open bull puts? I don't mean Ida. I mean I've got a long put in place, so I'm shorting puts against my long put in a bull put type format to make up as much credit as I can to pay off at least half, if not the majority of my long puts in my collar trade that I started out with. I trade Baidu. I would not trade Tencent or Tenant, I think is what it's called. they haven't inspired me to the point to believe that they don't have the track record to inspire me to the point where I would be willing to put my money into them. So Abraham, no, I only trade Baidu. I even don't like Alibaba. I mean, they've done good as well. It's not one that I feel I missed. I just feel I don't have the in or the understanding of how Alibaba is going to be important to, for all intents and purposes, a third world country, except for the top 10% who own all the money. I don't see a middle class yet that that takes advantage of an Alibaba. And I could be wrong, but no, I'm not an Alibaba, a Sohu, a Tencent, or any of those kind of opportunities. Are there any other questions? All right, if not, guys, I appreciate you being here tonight. Don't forget, you are allowed to ask me any question you'd like. I am licensed, bonded, insured. I can talk stock market and real positions. I'm trying to give you my understanding of what I look for in the market and why. Guys, have a wonderful week. I look forward to seeing you next week, and have a good evening, y'all. Bye-bye.